Good morning, everyone. Welcome to another market week. Just want to touch on what I believe is going to happen in 2026. I've been hearing that 2026 is going to resemble 2025 a lot, and it makes a lot of sense. And I'm going to justify that in this video. First and foremost, guys, I am not a financial advisor, but if you could please hit that like and subscribe. If any of these videos have just done something good for you or just given you any sort of helpful information, just take that quick second. It'll just take about 1 second to hit that like or subscribe, preferably that like button. But anyway, guys, so if you take a look at the chart here on the left, that is a chart from January 2025 to basically today, January 2026. So for those of you who may not have been in the market or just new to it, just a quick recap. 2025 started off strong, of course, still under the Biden administration, and then and under the Trump administration was still doing well as well. But then once the tariff talk really thickened and sped up, you got Liberation Day, which I mean it was basically another kind of COVID opportunity. And then after that, guys, we had one of the best runs historically ever. So that is going to mirror, in my opinion, this year. So if you look at this chart on the right, you have a little bit more extended time. But if you look right here where this line is, right, Liberation Day, you see the momentum, and then you start to see that in November, December, we kind of took a hit, right? The Santa Claus rally was somewhat there, but it was kind of muffled, right? And then after a little bit of slump in, I think it was maybe October, November, where we hit a pretty bad slump, and then we rebounded, right? So if you look at the chart from last year, it's like, well, how do you know it's going to be similar to last year? That's just what I'm hearing from a few people online, just people that I follow. So that's just what I'm going off of, right? Again, not a financial advisor. This is just my own due diligence. I suggest you do a lot more on your own. But if you look at this chart, we did kind of have a rise into the December month, and then we're kind of stagnating, right? So similar to what happened last year, right? Kind of a brief rise and then stagnation, and then kind of a drop into April/May, which I think is going to happen again this year, and here's why. So if we look into the Federal Reserve, right, which there's a lot of things that go into the stock market, but the Federal Reserve is probably the biggest, headwind, I forget how to use those words, but it's going to be a big deal, right? So first and foremost, Powell's term as chair ends in May. I'm not sure exactly what day in May, but Liberation Day was in beginning of April. This, in my opinion, is going to cause stocks to be very volatile up until May with the change. So then next, how do markets react? So I'm just going off of AI, right? But investors react rapidly to the expected direction of interest rates, right? So we're going to have to see, are they still looking to have at least one cut this year? If a new Fed is expected to cut rates, stocks may rise. Conversely, if a new chair is viewed as likely to raise rates to fight inflation, stocks may drop. Sorry about that. I personally think if you're going to get someone who's kind of on Trump's side, you're going to get rates to fall. Maybe not as much as people think, but just I think you're going to get someone who's gung-ho about, hey, let American people cut rates if it's somebody with Trump. If it's somebody who's neutral, somebody who's unbiased, then I think it will be a slower path to lower rates, but that's not necessarily a bad thing, right? Look at Jerome Powell. I think he's kept the economy, when it's all said and done, I think he's kept the economy in a very good shape. Poor guy being attacked all the time, but that's another conversation. So who's in the lead? Now, I don't necessarily know if he's number one in the lead, but I do know who he's up there, or I know that he's up there, and this is Rick Rieder. Now, guys, I really haven't done too much research on him, so let's just take that with a grain of salt. Please do your own. But I just heard that he's really the market's their biggest fan, right? Because he is he was BlackRock. He's well known with the bond market and all that. I think he just has a lot of financial historical guru-ness, but Kevin Hassett is going to he's going to do what Trump says. I'm just saying. So you just want someone who's neutral, someone who has experience, and I think the markets will respond very well if if you start hearing this name, brace for a strong reaction, a positive reaction, right? And last but not least, what is the Federal Reserve going to, have at their next meeting? They're widely expected to maintain a dovish pause, so no cuts. I know that they're going to really talk about the March situation, but dovish, right? So we'll see what that means. But Morgan Stanley predicts a dovish pause where the Fed retains language in its policy statement about considering the range and timing for further adjustments, which is most likely going to be a drop. But just understanding that the data needs to warrant that. So let me know what you guys think. Hit that like and subscribe again, and have a good market week. I personally think it's going to be a very good week.